Hi guys, hope you're well. Thank you for the continued support. Getting a lot of emails as regards to my private tutorials. You're more than welcome. Please do get in touch. The email address is financialfreedom007 at outlook.com. More than happy to oblige. Rates are very reasonable. Clearly, my time is very valuable to myself, and I must unfortunately put a price on that. I'm really not in this to take money away from you guys. As I said, I've lost a lot of money in this game, and it took me 10 years to learn how to do things correct. So I'm only here to help you guys. Also, wouldn't be doing these videos. I, of course, manage a portfolio myself, as well as trading positions which require a lot of my time. I actually trade within a group of individuals, and so we spend a lot of our time over that. So when you include personal things as well, unfortunately, I do have to charge a small rate for my services as such. Besides, 1 hour on Skype is usually enough because I get terrible migraines in front of the computer screen, as I'm usually in front of a computer screen for most of the day. So I do like to take a break. But as I said, if that's something that you guys would like, please do get in touch. I'm going to be more free over December. After the new year, I will be getting a lot more busier due to X, Y, and Z reasons. So if you want to get me while you can, then let me know. Anyway, let's get to the dollar. So the dollar's interesting. I don't think I've done an analysis particularly on the dollar. Now, this may not necessarily help my Bitcoin fans, but for my gold fans, it's rather interesting because I've been looking at the dollar since the year 2000, and let me just take all of these lines off just to show you how I got to my um, assessment. So if we take the larger degree count, um, I mean, this may not happen. This is purely my own opinion. If you take the larger degree count, this could very well be an A, a B, and a C. And this is very interesting. It's let's just make that a millennium cycle. So we could very well be in a really big ABC. Now, this may have come down in a 1, 2, 3, 4, 5, or it could very well be an A, B, and a C, in which case it's a W, X, Y. Now, doesn't really matter, but I think the dollar might be going to around 60 in the long term. I mean, we're talking 2022, and I'll get on to the date that that's going to happen in a minute. But I think that's my current count because I don't think this is impulsive. I don't think this is a 1, 2, 3, 4, 5. I don't think the dollar is going to go higher than this high. I think the high was in last year, and that certainly fits with my more bullish view on gold as well as silver. So if we break this B wave down, what I think is going on is in fact this. We've got an A here, we've got an A, B, C, which is a, suppose you could call it an expanded flat. Yeah, I suppose you could call that an expanded flat. Let's do that in a B. Then I've got a 1, a 2, a 3, a 4, a 5, and then C. So this will obviously be 1 degree less. Okay, so let's just I'm going to get the pro version, I reckon, of TradingView. I wonder how much it costs. If you guys know, write in the comments, because I want to start saving some. So let's just, so we've called the other one, as regards for all of these, people really make a big deal out of all this. I don't really care what I call them as long as you're working on a degree lower. So the other degree was millennium. Let's call this sub-millennium. Actually, let's just, well, I don't want to confuse you guys, but let me just make it clear that it's a lower degree cycle. There you go. So I'm just making it absolutely clear. Okay, I know my names of my degrees aren't right, but I'm just making it absolutely clear. Okay, bigger cycle, A, B, C. Okay, call it what you like. Call it dogs, call it giraffes, call it millennium. I don't care. I don't care about the name. This wave itself is an A, B, C, and that works. That works for me. That works for me. And extended flat. Yeah, so that works for me. It's around the 1.6618. I'm quite happy with that. And I think I mean, this might be wrong here because, but this may very well not be an ABC at all. This may very well be a 1. And then it's going to go into 2. Then it might do a 3 to around here. Well, 3 is going to be quite long, isn't it? 3 might find support around, well, might even be as low as there. Then a 4 back to here. Then it might end up as a 5. So this, once again, will do on a lower degree. So don't worry too much about the degrees. It doesn't really matter what you call them, but that's my count, and it's fascinating, that, isn't it? And before I go into the minor level, let's just assume, I mean, we've spoken about time quite a few times. I've told you Elliot didn't want anything to do with time, and time is something that I'm still researching, only because I find it so interesting how we can fib a price but we can't fib a time. And Elliot wanted nothing to do with time. He said he couldn't predict it. He just didn't bother. Other people have tried and they've failed, to be honest. I enjoy failure, frankly. I enjoy a challenge. So my work is ongoing. But anyway, in an ABC pattern, theoretically there has to be some sort of Fibonacci relationship between A and C. Usually they're equal. Okay. So what you do, you take this fib time extension, plot it from here all the way to here, and if you look at this, 1-to-1 ratio is here in 2023. So that seems a bit of a mile off. That does seem a mile off. Only because if it's a wave C, it's going to happen pretty fast. Wave C's happen pretty fast. So let's go here to the 0.618 relationship, i.e. this C wave is exactly 62% of the time it took for this A wave, which took about 8 years. Sorry, it didn't take 8 years. It took about, it took maybe 7 years. Yeah. So that means I've got dollar potentially. Once again, this is only just my own opinion, only because I enjoy time so much. I've got the dollar hitting 60 in the year 2021, which is 4 years away. Now, could that happen? Potentially, because and let me just show you how I got the level of 60, or somewhere close to that. It doesn't have to be exact, but essentially what you do, you take this Fibonacci trend wave extension. Once again, I mean, we're not surgeons here, yeah, so it doesn't have to be exact. Look at how this hit the 6.18 extension. Can you guys see that? Have a look around here. Do you see that? Hits the 61.8 retracement. Okay, so then what you do, you just bring this down a tad, so you get something like that. I mean, I got it at 60, so it doesn't have to be accurate, but as you can see here, 54, 60. So it's fascinating, isn't it, that we could very well be in an absolutely gigantic ABC pattern for the dollar, in which case we're now going to have some real problems with the dollar here. I mean, if I'm right about this count, initially I thought this might be a 1, 2, 3, 4, 5. This might be an ABC and the dollar's going to go higher. But then when you take into account the whole 8-10 years behind it, it makes a completely different picture. So if we now break this down on the weekly, what we have is a 1, 2, a 3, and a 4, and a 5. And I've told you many times this is going to go to 88. And the reason it's going to go to 88 is a few reasons. And I'm going to give you 3 reasons actually. So let's just take the first reason. Simple fib. That goes to there. Okay, boom. 88 fib, boom. 88. Right. Second reason. What's my second reason? Now, I had some lines in here. I should not have taken them off, to be honest. My second reason was I drew a nice little line from this low, intersecting all of these lows, and I believe it ended up at around the level of 88 as well. Do you see this? It's coming down to about there. Once again, it's not 100% accurate, but it's giving me a rough idea. And then the third line, how did I draw that third line? How did I do that again? I drew the third line. Let me have a look at my phone because I've got some. Sorry, yeah, I know how I did it again. Let me just this visibility, how do you take it down? That's too dark. That's a little bit lighter. I like that. Okay. The other reason for 88 is if you look at this high here, this A wave high back in 2009, and this high here, that was around, and this high, that was around 88. So it's horizontal support exactly at the 50% fib. So, you know, I mean, once again, this is purely my own opinion. I've got 3 reasons why people would be buying at 88. The Fibonacci people are going to be buying, as well as the guns, because a lot of the guns like 50%, because gun is basically 50%. That's all you need to know about gun. I never speak about gun because he just nonsense. There's only 3 people who I care about. That's Fibonacci, Elliot, and Wyckoff. I don't care about gun, but basically gun. Don't waste your time. Anything that retraces 50%, buy it. Done. That's gun in a nutshell. That's all his 50 years of hard work. My God, how did he make a living out of that? Anyway, so the gun people are going to buy here, the algorithms are going to buy here, the trend people are going to buy here, and the horizontal support people, volume wise, are going to buy here. Now, God, I love the dollar. This is just so fascinating. I mean, this is the kind of thing that keeps me up at night. I know I am quite sad. So yeah, 1, 2, 3, 4, 5, boom. And I also did some Fibonacci individualized movements on here. I mean, once again, this I might this was on the previous video, but if we take that as a 4, sorry, that as a 3, that as a 4, yeah. So do you see how the 61.8 lies around 87.88 as well? So that's a 4th reason. So I've given you 4 reasons right here, just to show you that the dollar is going to find, and then it's going to be absolutely fascinating, because is it going to do a B wave, then come down in a C wave, end up at 79, then it's going to shoot up, or is it going to do a big ABC in itself and wave 2, and then it's going to absolutely crash? And isn't that just fascinating? And 2021, let's be honest, right? We are due a recession, okay? The last one was in 2008, the one before that was in 2001. So once every 7 years, some shit tends to happen. So 2008 plus 7, what does that make? 2015. We got a bit of, you know, turbulence in the markets. Let me just quickly show you the markets. What is it? DJI, is that the Dow Jones? I'm sure I've done these fibs before. Yeah, yeah. See, I did some fibs here. Sorry, that's not that. That's the wrong ones. Yeah, I did some Fibonacci in this. I'm sure I worked out the Dow was going to go to 30,000 and then correct, either 30 or 40,000. But some things do. But anyway, so if you take once again, this is purely just, you know, my own opinions. But if you take the date range here, that was, yeah, so that was sort of 7 years or so, and then 7 years after that, you know, that was actually, that's about now, isn't it? Isn't that now? Isn't that the 5th of June? Is that going to be your next? That's interesting. 2009 plus 7 makes 2018. Sorry, yeah, that took 8 years. That's interesting. The Nasdaq top to the bottom of the recession took 3,367. 3,367. Took 9.2 years. So if you take 9.2 years, you add it on, you get the date of, what day is this? You get the 14th of May 2018, and that sounds about right. That actually sounds about right. Quite possibly the next recession is going to be, I mean, I predicted 30,000, so I'm going to go with 30,000 on the Dow. Maybe this is the next recession. Maybe this is it. So this date right here, I mean, I've got 30,000 from what I had worked out what I had calculated, but basically this date here, the 14th of, what the hell is that? Is that 14th of June or May? Yeah, so the 21st of May 2018 will be exactly 9.22 years since the financial crisis, which was exactly 9.22 years since the tech crash. So that's fascinating. Quite possibly 2018 is going to be the recession, because let's be honest, we are due one. I mean, if you want me to count this wave, this is a I forgot how I did it now, but it's a one. Yeah, I think that must have been the top of three then. That must have been the top three. So it's 1, 2, 3, 4, 5, 1, 2. So let me just draw it out for you guys. I think I had the count as a 1, 2, a 1, 2, 3, 4, 5, 4, and then Dow's going to 40,000 after that, so 40 something. I think I had the Dow correcting quite heavily here. The Dow's going to correct quite heavily. So, your World War III is going to be here. That's your World War III, because 2021. I mean, so yeah, that's your view on the Dow. But that's interesting, and that makes a lot of sense, because I've never done this before, but there's equality between these waves. So if you want me to, don't know how we got onto this, but let me just break these. So that is a 1, a 2, a 3, a 4, a 5. So basically we are now in the Dow Jones right now. I reckon you've got another maybe 4 or 5 months, you know, to buy all your FANGs and all your Amazons and shit, and then there's going to be quite a big correction. I mean, we're talking quite a heavy correction, because wave 4 was here. So we are now in a wave 5 off a wave 3, and then basically this is going to correct. I mean, I had 1, 2, 3, 4, 5, so 2. It's going to correct to at least 22,000, 20,000. Wow, that would be quite a hefty retracement if it was as low as that. Could it happen? 61.8. I mean, we all know wave 4s don't correct 61.8, but this only corrected 38.2. I mean, that is just marvelous. Don't you just love that? Don't you just love that? Okay, there's alternation which happens 61.8% of the time between wave 4 and wave 2. So wave 2 only corrected 38.2%. That means I'm expecting a heftier correction in wave 4. Now, they don't have to alternate in time and price, but they have to do one or the other, or they might do both. So if you look at this, so we've all agreed that wave 4 is going to retrace a lot more, yeah. So 61.8%. So quite possibly, the Dow is going to end up at exactly around. Sorry, no, that's not right at all. That's not right at all. It's wave 1. Yeah, sorry, wave 2 started here. Yeah, there you go. So 17,000. So I think the Dow, and so this time took, what's that? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 weeks. This wave 4 is going to be a lot worse. This wave 4 is going to be horrible. It could copy this wave 4. It could make an expanded flat. So I think that's what's going to happen. So I think in the Dow, at some point in May, we're going to hit the top. We're going to do an A. We're going to do a fake pop, and then we're going to end up going, shit, that is quite a big drop in the Dow. We're going to end up at 17,000. Okay, and that's your time to rebuy. If you guys don't know FANG, made famous by Jim Cramer, the dodgy chap. I think that's exactly what's going to happen on the Dow. I reckon we're going to hit a peak around 30,000 in around May. So if you guys are in your FANGs and your Amazons and Netflixes and Googles, I would suggest around Easter time you get the hell out of there, because I reckon we're going to be in for a recession, and this only took 12 weeks. This wave 4 is going to last the whole of, I mean, this is going to last at least until the end of next year. And this drop this drop could coincide with, what did we say in the dollar? We said, I forget what we said. I don't know how long this wave 4 is going to last. I mean, you know, this recession lasted what? How long? How long did this take? I mean, this was quite a nasty one, to be honest. This took, yeah, I mean, that took almost 2 years for that recession. How long did this one take? This one took a lot shorter time. So, you know, we are due a recession. So anyway, I don't know how long this is going to take, but then after that, I think we're due for a Dow, which is then going to double. It's then going to double to 40,000. So this is my long-term count on the Dow, 40,000. After which point, likely a world war. That's the only explanation I have for it, because there needs to be some big excuse to bring this down, because then the Dow is going to correct, unfortunately, quite heavily. It's not going to be good. It's not going to be good. I can't predict. This is probably going to happen around, I don't know, starts in 2018, 19, 20, 21, 2025. So probably before 2025, within the next 8 years. Let me think. So every 21 years there's a big crash. 2008 plus 21, 2007 plus 21, 2026. Yeah. So every 21 years there's a big crash. So I reckon in 2026 the Dow is going to hit 40,000, and then it's not going to be good, because then the Dow is going to go all the way down to, as a minimum, at least here. The Dow is going all the way back to 6,000. It's got to correct at least the whole of the last wave 4, so it's going to end up within the range of here to here. So the Dow is going to correct, well, quite significantly, only because this will be a major super cycle wave 5, because the Dow started, it kicked off. I mean, I don't even have all the data, but I've checked it. Wave 3 started all the way at the time of the Great Depression, when it was at around 185. So anyway, that's my, this has gone on a little bit longer than I anticipated. I'm not sure how many people are still going to be watching this, but that's my long-term count on the Dow. The Dow's going up around May. It's going to come back down in a big crash, which might last a few years. You want to sell all of your FANGs out of your portfolio in the next 5 months, I reckon. We're definitely due a recession. Then it's going to go back up to make a major wave 5 of 5 of 5, and then we're going to get World War 3 probably within 8 years or something, and then the Dow is going to collapse. Probably the biggest collapse you'll ever see in your lifetime, if you're old enough to live through that. That's going to be quite a big drop from 40,000 to 6,000. So I'm predicting, well, a 30,000 point drop on the Dow. So you see, Elliot wave allows you to predict the future. So let's just quickly go back to the Dow, sorry, the dollar. So yeah, the dollar, I've got, what was it? Was it 2018 with the let me think. That's going to be, so this 88 could be hit before the end of the year, and then do you see how 2018, 18, so quite possibly this wave 2 might end up coinciding with a market correction. So the dollar's going to go down as the market corrects down, which is something that's kind of happened before, didn't it? Kind of happened here, 2007 and stuff. Yeah. So you know, it's 2009. So you know there was a bit of movement here. So that's that's my view. But as a, as I keep on saying, time is very difficult to predict. But for me, it's just interesting how the 15th of May 2018 will be exactly the same length as the previous two crashes in terms of time. But anyway, that's what I think is going to happen. I think the dollar's going to hit 88. It's going to correct at some point around May next year. We're going to get a correction in the markets. Everything's going to sell off to about 20,000, and I think that's going to make the dollar come down, and probably that'll make gold finally stop fucking about, because it has been fucking about. Let's be honest, the last 1 year has been fucking about. It's going to just keep on fucking about here, and then that's going to make gold go all the way up. So wow, I'm exhausted. Anyway, I'll leave that to you guys. That is just more of an in-depth tutorial. So that's the way that I analyze the market. So if any of you guys are interested in please do get in touch on the email. That's my analysis, and that's the kind of extent you need to go into. You need to be thinking about the technicals, the Elliot, and to be honest, fundamentals, as much as I don't like them, when you're talking the longer term time frames, fundamentals to some degree definitely play some sort of part. In my way of trading, because I'm so short term, I don't care, but occasionally I like to look at, analyze the markets, because if if you've got an idea that the Dow is going to hit 30,000 and then correct, that's really useful, because I am holding FANG. I've got shares in all of them, and I'm not going to sell because we're still in a raging bull market. But if you know that you're in a wave 3, that's potentially going to top at around 30,000. It's quite useful information, isn't it? Now, the only thing that's missing from this, just sorry guys, I know it's gone on too long. The only thing that's missing about 30,000 is the fact that this is wave 5 of wave 3. We've said that. That's a 1 2. That's a 1 2. That's a 3. Is that a 4? Is that a 4, or is it going to make a 4 next May and then go higher? That's what I'm not sure of. That's what I'm not sure of. I'm pretty sure at 30,000 something's going to happen, either a wave 4 or a wave 3, or it's going to go higher. But that's the only thing which I haven't quite concluded yet. But either way, at 30,000, I think you're good to hold your FANG for now. But I would be selling there. But anyway, sorry about this, guys. It's gone on for too long. Hope you guys have enjoyed this. This is just what I do with Elliot. So if you want the tutorials, if you want any more information, please do get in touch. I'm more than happy to run through these things. As I said, I only have to charge only because my time is so valuable. Even making these videos takes me a long time. I don't get the chance to do them every day. But I find the markets inherently curious. There's a lot of money to be made here, but you must be on the right side of the trade, and you must make sure your knowledge is spot on. Okay, your knowledge needs to be spot on. But anyway, that's my overall thesis. So dollar is going to 60, and I'm going to put a date on that in 2021. That's my projection. So yeah, good luck to you guys. Catch you soon.